Evolutionary journey since 2016. So please welcome Chief Executive Officer of Harmony Gold, Peter Steenkamp. Welcome, Peter.
Good afternoon, and for those that don't know me, Peter Steenkamp, the CEO of Harmony. And it's really a pleasure for me to present today at the Gold Forum Americas. Please take note of a safe harbor statement. So let's start with the company strategy and an update since we presented here last year. Our strategy is aimed at creating long-term value for all our stakeholders. We achieve this through production of safe, profitable ounces and improving margins through operational excellence and value-accretive acquisitions. For those of you that are unfamiliar with the company, Harmony is a specialized gold producer with a growing international copper footprint. We have over 73 years of gold mining experience in South Africa and have been operating in almost 2 decades in Papua New Guinea. We are listed on the Johannesburg and New York Stock Exchanges. At 1.47 million ounces, we are South Africa's largest gold producer by volume and have a diversified portfolio of operating assets which include gold, silver, and uranium. During the 2023 financial year, we added a Tier 1 mining jurisdiction with the acquisition of Eva Copper in Australia, and we have 9 underground mines, 2 open pit mines, and 4 tailings retreatment operations. Our gold tailings retreatment business, or recycling business as you would know it, is the largest globally and is set to grow, supporting the circular economy. Our largest mineral resource and mineral reserves declaration is 138 million ounces and 39 million ounces respectively. A substantial resource base, and our pipeline of projects presents an incredible opportunity to convert these resources to higher quality reserves. In addition to the various projects we have in South Africa, the Tier 1 Gold project in Papua New Guinea and Eva Copper in Australia provides us with a sizable international copper-gold footprint. Mining with purpose, ensuring all our stakeholders share in the benefits of the minerals we extract. To ensure the continued positive returns, we directed our major capital towards higher quality assets and projects. Our 4 strategic pillars support our planning and investment decisions. These capital investments will drive down cost and improve margins, transforming Harmony into a higher quality gold-copper producer. Our South African high-grade and optimized underground mines are delivering strong operation-free cash flows to support our growth aspirations. Our high-margin South African retreatment operations in the Free State, West Wits and Vaal River area are low risk and support our contribution to the circular economy. These operations will continue supporting our international gold and copper growth aspirations. This year was a landmark year for Harmony. Not only did we again deliver all our guidance metrics, but our expansion into the near-term copper took hold. We have built up an incredible momentum supporting by an improved safety performance. Group lost time injury frequency rate per million hours worked improved to 5.49, and this was remained below 6 for 2 consecutive financial years, a first in our 73-year history. Gold production remained steady year on year at 1.47 million ounces. Underground recovered grades exceeded the upper end of guidance, improving by 8% to 5.8 grams per ton. Our costs remain under control, with all-in sustaining costs below guidance at around $1,500 per ounce. This was a decrease of 10% year on year, despite the current inflationary environment. We deployed over $100 million in major capital as we invest in quality ounces. On the back of the good operational performance, we generated 330 million ounces in operating free cash flows, and this enabled us to maintain our strong, flexible balance sheet with net debt to EBITDA at 0.2 times. And in line with our dividend policy, we paid a final dividend of 4 US cents, returning cash to our shareholders alongside our overall growth strategy. Now, it's been 7 years since we embarked upon our safety transformation journey. We have made tremendous progress, and risk management is now embedded throughout Harmony. Taking care of the Harmony family requires a holistic approach to safety and health. The prevention of work-related accidents and illnesses is of critical importance as we aim to go beyond zero harm. As I mentioned, our group lost time injury frequency rate is now below 6 for 2 consecutive financial years. Our loss of life injury frequency rate was also declined to 0.06 per million hours worked. Whilst this is the lowest in our company's history, more still need to be done to ensure that we achieve our goal of zero loss of life. We have embarked on a large renewable energy program to drive our decarbonized strategy. This program will deliver over 360 megawatt through renewables and alternative energy sources by financial year 2026. Phase 1 was completed this year and is generating 30 megawatt of solar energy, delivering green electrons to our Free State operations. Construction of Phase 2 will commence in this financial year. This will add a further 137 megawatt in renewable energy generation capacity. Once complete, Phase 1 and 2 will generate 167 megawatt. This is approximately 30% of our peak South African operations daytime demand and will save an estimated $24 million per annum in electricity cost. We are on track to achieve our goal of carbon net zero by 2045. True sustainability is embedded in all our decisions, and we believe in actions over words. We believe in accountability and creating value by doing what is right and doing what is in our stakeholders expect of us. It is evident in our respect for the environmental human rights and our focus on cultivating an inclusive, safety-focused culture. We encourage leadership, excellence, and have transparent and strong corporate governance throughout the company. Our senior management team is diverse and highly skilled, with over 320 years of combined experience. Note that 40% of our senior team is female, something we continue to celebrate. On board level, close to 70% of our board represent historically disadvantaged South Africans, well in excess of the legislative targets. As a result, we continue to receive positive external recognition for our efforts in sustainability. This is mining with purpose, and that is what we are all about. But Harmony is an exciting growth journey with a quality growth pipeline to support its strategy. In 2016, when I became CEO of Harmony, we embarked on the first phase of our growth strategy. At that stage, our production profile was represented by the dotted black line on the slide. Since then, we have demonstrated our ability to create shared value through effective capital allocation. We have increased our production, added near-term copper to our mineral resources, and increased our life of mine significantly. As things stand, Harmony could remain a 1.4 million ounce producer well into the future. We are investing in quality ounces now to ensure stronger future cash flows at higher margins. This profile is purely for illustrative purposes and includes both approved plans and projects still in feasibility. It also excludes any potential future value-accretive acquisitions that form part of our strategy. However, it paints a very healthy picture of the future of our company with significant potential for further value to be unlocked for all our stakeholders. Value creation, however, can only be achieved through effective capital allocation. This is an ongoing and integrated process to find optimal mix, ensuring we deliver on our strategy. We have prioritized capital to drive safety and productivity improvements. In anticipation of the Eva Copper and our other key projects, we have maintained a strong and healthy balance sheet and intend to keep our net debt to EBITDA below 1 times. It is on the back of this effective allocation of capital that we have lowered our overall risk profile, improved our margins, demonstrated our ability to generate meaningful returns, and converted our resources to reserves, thereby extending our production profile. Our quality growth pipeline will unlock further value as we take our projects up the value curve. We are conducting various exploration drilling activities across all jurisdictions. These include regional drilling in the Eva Copper surrounding tenements, drilling at Target North in the Free State is nearing completion, and we are conducting brownfields exploration drilling at Joel Mine to determine the possibility of deepening this mine. Pre-feasibility studies include Keremengi heap leach project near Hidden Valley and expanding our surface sources to convert 5.7 million ounces of mineral resources to reserves. As we have communicated, the Eva Copper feasibility study are being updated. We expect to have the full results in the third quarter of the 2024 financial year. We are also finalizing the feasibility studies to determine whether we can expand Mponeng safely and profitably. Mponeng has 24 million ounces of mineral resource at an estimate in situ reserve grade of 13 grams per ton. This could potentially add 25 years to the existing life of mine of Mponeng. Having signed a non-binding framework, or MOU, in April this year, we have taken a significant step closer to obtaining a mining development contract for Wafi-Golpu. This is a prerequisite for the granting of a special mining lease. Our other projects in execution include the Zaaiplaas project, the 9 grams per ton high-grade life of mine extension of Moab Kotsong, Karierand, which extends the tailings surface facility at Mineway Solutions, adding 14 years life of mine, and the Doornkop extension of 207 and 212 levels, and then the Hidden Valley extension with stage 8 cutbacks now underway. With 138 million ounces of mineral resources and 39 million ounces in mineral reserves, Harmony presents a substantial opportunity to invest in an exciting gold-copper story. According to S&P Global, copper demand is expected to double to a record high of 50 million tons by 2035. Based on current copper trends, this could mean a 10 million ton global shortfall by 2035. It is for this reason that we are investing in growing our copper footprint. We believe our copper projects will help bridge the supply gap. Copper represents 23% of our mineral resources through the Eva Copper in Australia and Wafi-Golpu in Papua New Guinea. There is a meaningful upside potential to our mineral reserves once Eva Copper and the Mponeng extension feasibility studies are completed at the end of this calendar year. Now, with only 26% of our reserves in South African underground mining, our production profile has been significantly de-risked, and the balance of our future production will come from South African surface gold, PNG copper and gold, and in time Australian copper. We therefore offer counter-cyclically diversification to the lower risk and well-diversified gold and copper portfolio. In order to achieve this growth plan, high capital expenditure is necessary. Over the next few years, a growth capital will increase, but this is due to our sequence of projects that we have already discussed. It is, however, important to illustrate that our sustaining capex, or capital required to keep our operations going, has remained consistent. Sustaining capital will increase in 2024 financial year due to development as well as maintaining operational flexibility. At Hidden Valley, we are investing in the necessary fleet replacement and continue with stage 7 and 8 cutbacks as we extend the life of mine. So Harmony delivered solid performance in the 2023 financial year. Our South African high-grade underground operations continue to drive the strong operating free cash flows due to their good margins. These high-grade operations contribute 31% towards group production and almost $200 million in operating free cash flow at a margin of 23%. This represents 57% of the group's operating free cash flows. Our South African optimized and underground portfolio contributed 42% to the group's production and $62 million or 90% of the group operating free cash flow. Our South African surface operations contributed 18% towards group production and generated 835 million rand in operating free cash flows. Margins at the South African surface sources operations were suppressed due to the large capital projects underway at Mine Waste Solutions. Hidden Valley, our international quadrant, contributed 9% towards our total production and generated $34 million in free cash flow. It's on the back of the strong operational performance that we delivered an excellent set of financial results. Group revenue remained flat, but just under $3 billion on the back of the higher underground recovered grades and higher average gold price received. EBITDA increased by 32% to around $700 million, while headline earnings per share increased by 36% to 45 US cents. Net debt to EBITDA reduced out to 0.2 times after reaching 0.6 times post the Eva Copper acquisition. There was therefore minimal changes to leverage year on year as we maintain our balance sheet strength. Costs continue to be well managed in a high global inflation environment. In dollar terms, total cash flow operating costs decreased by 10% to $1,288 per ounce. This was mainly due to the weakening of the rand and dollar exchange rate. A large labor component and predictable electricity tariff increases have also helped to ensure local currencies increases are predictable and consistent. There are two items account for about 60% of our cost base. Consumables increased by 5% in dollar terms, but over 20% in the local currency, mainly due to increased cyanide prices and increased diesel usage in Hidden Valley due to a drought that was there at the time. Our net debt to EBITDA is trending downwards since 2018. Despite our various acquisitions, we have kept it comfortably below the 1 time. Our balance sheet remains robust and flexible, with just under $400 million in available headroom. This places Harmony in a very strong position to fund future acquisitions or projects and absorb any adverse changes in the rand gold price. Harmony has always been a highly leveraged play on the rand per kilogram gold price. You will note that for every 1,000 rand per kilogram increase in gold price, Harmony would have generated about $200 million in additional operating free cash flow in the 2023 financial year. Currently, the gold price is over 1.15 million rand per kilogram, providing us with significant tailwind and strong operating free cash flows. It's because of this volatility that we have an effective hedging strategy in place. Now, the rand gold hedge book is currently filled to 20% limit. It is at an average head cover of 1.1 million ounce per kilogram for the 2024 financial year and an average around 1.3 million rand per kilogram for the 2025 financial years. So in conclusion, Harmony has a sizable and exciting project pipeline ahead. Project execution and capital expenditure will continue to be very well managed. We have plans such that our project capital is well sequenced, with most of the current capital requirements being internally funded. Our projects are catalysts to meaningfully expand margins over the next 4 years as we continue to drive down cost and improve the quality of the portfolio. We expect to deliver the first copper from the Eva Copper project in 2027 financial year. This is subject to the update feasibility study. In addition, we will also see the first gold from the high-grade Zaaiplaats project at Moab Khotsong financial year of 2027. The transformational Wafi Gold Pool will move Harmony into a first-quality quartile cost producer. However, first production is contingent to the special mining lease. Circling back to where I started, Harmony is a specialized gold producer with a growing international copper footprint. We have improved our safety performances and embedded in sustainability practice throughout our company. We have delivered operational consistency and delivered strong positive free cash flows. Our mining team has the right technical skills and exploration capabilities to take our projects up the value curve. We are geared exposure to the rand per kilogram gold price, provides us with strong tailwinds, and we are seeing good operational free cash flows at current performance. With a flexible and robust balance sheet, we are well positioned to deliver on our operational plans. Production guidance for the group for the 2024 financial year is between 1.38 and 1.48 million ounces, and an all-in sustaining cost of less than 975,000 rand a kilogram. Underground recovered grade is guided between 5.6 and 5.75 grams per ton. What we achieved in the past financial year demonstrates that we are indeed succeeding in our goals. I'm confident that we will achieve new heights as we continue delivering long-term value for all our stakeholders. I thank you for your time today and for allowing me to share the Harmony story.
Thank you very much, Peter. That was excellent.